All right. And here it goes. Let's see if we get something out of CPI. NAS making an initial move higher. Euro USD initial move higher. And there goes gold. Gold also pumping here to the upside. Look at that move. Gold 1928, quickly 29. Let's see, euro coming up, guys. That we talked just about this moments ago. Euro USD is at a level of resistance. We need to watch to see how this spike is reacted to. Are sellers going to hold this zone of resistance? And look at gold. Gold seems to be taking the lead here. Gold making a substantial recovery here. You know, this morning we were trading around 1917. We're up to 1928. That's a significant push to the upside. Dollar yen selling off, however, holding its own. The spike has been kind of erased on dollar yen, interestingly enough. Look at this, guys. 1928. Can gold break 1930? And NASDAQ up to 15,279. We printed. Let's see if that keeps going. Again, we're watching the reaction. Let's also get an idea of the numbers. Numbers came out at 3.2. 3.2, better than expected, guys. That is a better than expected number for inflation, not for the dollar. This can be confusing. That is not a good number for the dollar index. The dollar index is not going to like that. I'll show you guys. We can pull up dollar index, because dollar index, again, if inflation is more under control than what was expected, then of course that's going to mean rate hikes probably not going to be as likely. And that means the dollar is going to sell off, because rate hikes make the currency more attractive. People are going to be buying bonds. They're going to be, buying interest rate backed products and securities, which of course are all priced in dollars. You need dollars to buy US stocks, US bonds. All those things become more valuable if interest rates are higher, right? Because again, the value of the currency. So keep an eye on that.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders Signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
101.82 on the dollar index. Euro USD holding its gains, guys. We're above. NASDAQ close to the highs here. Gold in 1930 getting tagged. Let's see how we do here at 1930. And let's go isolate some charts here for a moment. Let's see also how the trade signals are doing here this morning. We are back in the green on NASDAQ here, up $112. So again, basically break even on my NAS position there. But love to see a nice pop here on the US indices, which of course, like I said, I am long. I told you guys where I'm at. But again, it's too early to say, oh, there's no victory dance to do just yet for me on my index trades. I am a swing trader. So for me, this is looking for, I'm looking for a couple days of rally. If we can get that, then incredible. If we can't, then I'll need to kind of erase my trade and close out. So that's where I'm at with it. Again, dollar bears probably having a great day. If you sold this dollar, I mean, beautiful, beautiful hold here. And this is, I mentioned my game plan yesterday. If you follow me on Twitter, or if you follow me on, of course, here on YouTube, if you watch my videos, my game plan was that if inflation numbers were cooler than expected, the plan for me is sell the dollar, right? And so that's where I am at. I'm not telling you guys what you should be doing, because again, this is not financial advice. I am a YouTuber that trades. I am not, your personal financial advisor. So please, do everything with caution and make your own trading decisions. But for me, this number tells me, okay, the dollar rally here probably looks like it's fizzled out, looks like it's run its course. Dollar index looks really weak, and I'm happy to see that that is nicely impacting my NAS 100 position. We'll see if that one can continue to hold. Other things that I'm watching, sorry, let's see. Aussie dollar, is this one rallying? Yeah, look at this, guys. I was actually kind of interested in this trade setup. This one might, if it pops back up into this area, I might actually be entering into a Aussie dollar short here pretty soon. I actually kind of like this setup. So let's come back to that one. Euro USD. Look at this. So I didn't take this trade, but I thought about it, and I'm glad that I did not. Again, I told you guys I was pretty dollar bearish unless we saw something surprising here today. So I didn't take any trades on Euro USD, and I'll prove that to you so that you're not like, oh yeah, you're only showing the ones that work. No, I thought about taking euro dollar trade, but I held off because I knew CPI was coming, and CPI can be, of course, crazy. So I've only had really a NASDAQ trade on in terms of short-term momentum trades. So that's kind of where I've been positioned. However, I actually need to take a sip of my coffee and think about this euro dollar for a second. Okay, so Euro USD broke clean through the areas on my chart that I marked. So what the heck does that tell us? Does that tell us, oh, clearly, this is just a liquidity run and the market's going to go right back down? Maybe, but I would argue that this candle really matters. And what I mean by that is that, okay, look left, guys. We've got a downward trend going on in the euro. Huge resistance. Let's watch how this candle closes. This is a 4-hour candle with just 22 minutes left on it. I'm sure many of you guys are familiar that the higher the time frame, the more impactful usually the chart actually is, right? So if we get a bullish close on this 4-hour chart, that's going to be a huge deal for the euro dollar bulls. But if this chart closes bearish, that's going to be tough, right? So if we see the opposite effect, if we see a big sell-off and we see price continue to push down, again, watching how this candle closes is really impactful. So I will say this, guys, if the euro dollar actually closes like with a huge wick on top, then I would actually be probably pretty bearish at this level, right? If we get a candle like this. However, if we get a candle like this, right, that would be insanely bullish, because now this level of resistance that we just marked on our chart could become kind of a floor, right? Right now, it's acting kind of as a ceiling. If this price breaks out and stays above that level, it could actually start acting as a floor, okay? So we also had something else here on the numbers here this morning. Let me go ahead and load the screen here. So we had unemployment claims also come out, which came out hotter than expected. So that is showing some cooling in the jobs market, as well as, of course, our headline CPI year over year came down. It actually went up to 3.2% from the previous, which was 3%, but forecasts for it to go to 3.3. So this is in some ways very bearish for the dollar. Which was rallying on the idea that forecasts were at 3.3%, and now we're getting 3.2%. Okay. So overall, where does this leave us? Well, again, I think that this report is pretty dollar bearish. And so, like I said, watching things like euro dollar fundamentals, right? So you mentioned CPI today came out 3.2%. Does this change anything for you, or does this actually give you more confidence on some of your trades? Of course, I would say that your US oil trade, I would say it looks good now. The fundamentals, I think that that's a nice factor. What do you think?
Yeah, it's almost like the expectations matter more, because so we did see a rise year over year. It went from like 3 to 3.2. Core and month over month, just standard CPI stayed the same though, which could indicate, there's some stubborn inflation, I guess. But with the interest rates as high as they are now, like, it's pretty likely that inflation will keep moving down. The job market has to comply with interest rates too. But overall, like, I think the miss in expectations, even though we saw a rise, it didn't rise as high as analysts thought. So I feel like that's almost a better indicator than seeing it rise than higher than last time. Yeah, I think we're at a pretty big decision point here. Gold and the indices, especially, they're up against this sort of trend line. You got it drawn on like the 1 hour or the 4 hour. And I think what it's got to do is it's got to close above. Right now, it's not showing an indication of that, but you could either see a really good short setup right here, or maybe a breakthrough and a shift in direction. But yeah, hoping for some upside, because I'm in the S&P right now. And if not, I'll have to rely on gold and Kiwi yen to keep me in profit. So
Yeah, I think I was going to say, like, you've got these clear downward trends on the technical side. Uh, but again, this CPI report coming out, cooler than, I guess, what was forecast. It's still a tick up year over year. But this is not the first time that we've had, well, actually, it's been a string of overall lesser than expected inflation, which is why the markets have been, really strong recently. And I think gold trading back down to 1915. My personal opinion is I think we have more upside. Now, one thing that we talked about yesterday, Frank, is we talked about kind of just China and the slowing inflation, and of course, the metals market could have gotten a hit from that because again, China is a lead exporter in the world and they use a ton of raw materials including gold and silver in their economy. So a slowing in the Chinese economy has some metals market impact, but again, I really like, I mean, the CPI report came out today. It was in some ways kind of a win, but to your point there too, this technical downtrend has to crack before I give another shot to my gold longs personally.
yeah.
If you caught the lows, that's awesome, but that's kind of where I'm at. I'm waiting to see that breakout on things like gold.
Yeah, I think that's a good stance to take, just because everything is so mixed. But even if you pull up the Fed Watch tool, it's now saying over 90% think that interest rates will stay where they're at, and almost a little under 10% is saying that they'll hike, which is pretty nice to see because earlier this week it was, I think, more so around 14% thought there was going to be a hike. I could be wrong. I could be making that number up, but I'm pretty sure it was higher earlier in the week. So seeing after this inflation news, seeing how the expectations of a pause for August or the next meeting was pretty high. So that's kind of promising.
Yep. Yeah, no, I'm with you. And I think, it's like you just said, Frank, of course, the indices have seen the love of, of the Fed's likeliness to kind of come to a slow on these interest rates. The indices have seen that. Where I really like your trade on oil and gold is I think that, the commodities have not yet seen kind of the potential there. And so you've got oil already. You're in that trade alert. You shared that inside of the group. That's going awesome. I continue to be jealous on that. But I do think also, I keep coming back to gold and thinking that, this market has plenty of upside once we start to see, in my opinion, the crest of interest rates in the US. So again, gold is still, it has been, and it continues to be kind of something I'm really, really kind of rubbing my hands together and waiting on. But yeah, I think we're on the same page with that. Commodities, probably the lesser appreciated compared to, of course, indices, which have had really strong runs. We'll have to see if we can get these breakouts to get some trades going.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.